What's the dynamic for stocks that matter to you?
Good morning, everyone. Hi. Look, the thing is, since the of last Tuesday, the betting markets, forget the CNN polls and the Wall Street Journal polls, the betting markets started pricing in a Democratic sweep, right, which means taking the Senate as well as the White House. And what you saw was the cyclicals rallying because the expectation is whether or not you get a stimulus bill in the next week or two, you're going to have something even larger in the first quarter. And as we know, markets anticipate and see through the noise of the next few months, and that's essentially what markets were pricing in. And to the extent that it's looking like a more lopsided victory for the Democrats. It may not happen, but that's what the betting markets are telling us. Then markets are pricing in a huge fiscal bill larger than anything that Mnuchin or Pelosi could come up with right now.
Alicia, I keep returning to this question. What we've seen so far, is that just a position squeeze, or do you think people are starting to think about durable change over a sustainable period, that internal rotation, higher yields, a steeper curve, beyond just a 2-3 month trade?
Yes. So I think investors are starting to position here. We don't like telling investors or our clients that they have to do particular things before elections. Markets go up under both administrations and different configurations of Congress. However, it's clear that certain sectors will be better off under different administrations. Certain sectors will have, some regulation under both administrations. And so we think it's time, with the outperformance of tech since the March 23rd low, and really for the 2 years beforehand, that's really time to start looking at the cyclicals. We do think the U.S. really has no choice here. There will be some fiscal stimulus passed, whether it's the next week or two or the next 4 months. We will be getting something, and with rising yields, that suggests cyclicals will be in favor.
Are you making a multi-year projection here, Alicia? What is this, 2, 3, 4, 5 years? What is it?
Look, that is a really tough question because right now policy is everything, and we know that, right? So Fed policy, central bank policy globally, sustained markets, put a floor under markets, and it was responsible really to the functioning of markets. What became a health crisis could have been a financial crisis and a banking crisis as well, and it wasn't because of the Fed. And fiscal stimulus globally has been enormous, and the U.S. has really been in the forefront of that, spending 15% of GDP on fiscal so far and looking at another 10%, which is really extraordinary. So much depends on policy. So there are vagaries in policy here or there. The thought is that the Fed may come in here and clarify its asset purchases monthly to help stabilize markets if there is no fiscal bill in the next week or two to help get the market over that hump.
Wait, hold on a second. Alicia, I'm so sorry, but to stabilize markets are doing just fine. I struggle with this, the idea the Fed will come in with additional asset purchases. The market right now is pricing in extra stimulus come next year, regardless of who wins, regardless of how it happens. What is that threshold of stabilization? What does it take to get the Fed's attention here?
So I think, look, if we heard Jay Powell yesterday, I think if there's no fiscal in the near term, meaning, soon, next few weeks, maybe we hear something about asset purchases. Maybe. That is the hope of the market and the expectation of the market, because if the Fed is essentially begging Congress to do something and the government does nothing, you would expect that the Fed would try to do something as well. I think markets are supported here. I think we're volatile. It's a volatile season. The election is sort of this existential risk, but not really to the extent that we have a clear victor and then we can move forward from there. And as we know, once policies are clear and direction is clear, you can invest.